Hello everyone, welcome to the Mortgage Brothers Show for April 20th. It's a Wednesday, and if you're trying to do a shortcut through all this content, you absolutely can. If you look in the description below, you'll see all these little timestamps that you can shortcut through the content and make it quick and easy. This is the interest rate update. So what we do is we go through the interest rates today, and we'll be showing you what payments will look like. We'll do some comparisons and some charts. And if anyone is looking for a home purchase and you're looking to get a mortgage to purchase a house or to refinance, or you're a home seller or you're a realtor, this is a great channel to subscribe to. Click the notification button and that like button and share the channel. Also, a quick disclaimer before we get into the content. This is not financial advice, right? This is for informational purposes only. We are only licensed in the state of Arizona to do mortgages. So that specifically, we can only help borrowers get a mortgage to purchase a house or refinance in the state of Arizona. But don't worry, no matter what state you're in, all the programs we talk about are nationally syndicated. These interest rates are going to be virtually identical everywhere in the country. And let's go right into where we are today. We are seeing the 30-year fixed interest rate at 4.99% today, the 15-year fixed at 4.125, the 5-year adjustable rate mortgage at 3.875. And just a quick note, this is, well, the difference between a 5-year adjustable rate mortgage and a 30-year fixed is much larger than it used to be in the last 2 months. So definitely, adjustable rate mortgages are something to be looking for, or maybe looking at a little closer if you are out there, because of the interest savings, maybe their time horizon. So anyway, definitely something to be looking at. The 30-year fixed FHA is at 4.49, and the VA 30-year fixed at 4.875. This graph is showing a history of the 30-year fixed since 1971, 50 years. Right, and you can just see that this is the Jimmy Carter days. Then you get into the Reagan, right when Reagan was getting in, we had that interest rates all the way up in the very beginning, about 1981, 1982, almost 18% for that 30-year fix. Can you imagine? A lot of you can. I don't remember those days, but it was before my time. Then we get into this channel in 1986. We see the interest rates on the 30-year fix are stuck in the channel, ricocheting off the bottom and tops, and basically stuck all the way down. And so what's happening between 1986 and today is the policies of our country, our lawmakers have continually printed more money. They constantly went, whether it was wars, whether it was stimulus for financial, anything that would, and then of course with the dot-com bubble, the housing recession, the big housing recession in 2007, COVID constantly has been leading to more money printing. And this is what happens, is you're going to have more money flooding the system. The interest rates have continually gotten lower because the Fed's lowered their rate, and the market has been continually going lower. We have broken out of this channel only a couple weeks ago. So the theory is, we hear a lot of experts talking about how interest rates will go back into this channel. Now, it may take some time. Maybe by the end of 2022, I've heard people talk about that. Maybe into 2023 or 24, we will go back into that lower trend down. So just something to keep in mind, that we do not anticipate rates somehow reversing course and going up over the long term. Okay, inflation, I'm going to show you this chart here just real quick. The inflation is the red number, and these are up here are the 30-year fixed, them in blue. The ARM adjustable rate mortgage is there in orange, and then the 15-year fixed is that green line there. But just in showing inflation, what has inflation been doing? This is COVID, the start of COVID, it almost was 0% inflation, and now we're at 8.55%, which was announced a couple weeks ago. And that's affecting, of course, all of our lives, whether it's at the gas pump, at the grocery store, our mortgages, everything. Okay, so inflation, it's the highest level since 1981. Yeah, so again, if you can see from this chart, here's where we're at here, 1981, 40 years ago. That's how long ago it's been, or that's how long it's been since we've been this high. Okay, so today we're going to look at something a little bit different, but how much income do you need to qualify based on today's median home price? Now, the price here you'll see is $470,000. That's the median home price in Maricopa County, which is the biggest county in Arizona. It's where Phoenix, Scottsdale, Glendale, Tempe, Mesa, Gilbert, all those cities are at. And a lot of our country's median home price in the U.S. is very, very close to that number. But the point is, this is an analysis of how much money do you need to make annually to qualify for the median home price. I thought it was an interesting way to look at it. And there's a couple of different buckets. There's 4 buckets. Borrower 1 has monthly debt of $100 a month. So basically virtually very little debt. He just has $100 of monthly payments. And that's, imagine a credit card. This is how much the payment is for that. Here's the estimated cash to close, like how much money you would need to put into the deal. This is at 20% down at 4.99%. And then we have the estimated annual income needed to qualify, $65,000. Okay, or $65,400. Now that's scenario 1, borrower 1. Now if you're borrower 2 and you have $500 of monthly debt, you would need to make about $76,000 a year. Look, maybe that's a car payment. And then you have, imagine scenario 3, you have student loans. Maybe you have maybe you have, $800 in student loans a month. And maybe you have $600 of a car payment. You need to make $102,000 a year. And then if you have $3,000 in debt, a lot of student loans, several cars, your life has more debt at $3,000 a month. And again, this is just so bucket number 4. You would need to make about $142,000. I thought it was a very interesting way to look at that. I wanted to show that to you all. And if you wanted to know more about the Mortgage Brothers team, you can always Google us, and you'll be able to read our reviews. You can see where we work, our phone number to contact us, and I hope everyone, if you need anything, just reach out to us. And we'll be back tomorrow. If you have a scenario you would like us to ever look at, be sure to in the comments below to put that in there, and we'll try to address that in the next coming days. Take care, everybody.
Hey guys, thanks for listening to the Mortgage Brothers podcast. Please let us know if you have any questions you'd like us to answer. You can email your questions to team@azmortgagebrothers.com, and be sure to ask us for a free quote on your next mortgage. We'll be sure to give you personalized service and help you through the whole process. Signature Home Loans, LLC does not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only. You should consult your own tax, legal, and accounting advisors before engaging in any transaction. Signature Home Loans, NMLS 1007154, NMLS number 210917 and 1618695, Equal Housing Lender.